All right, Mr. Anthony Capuano joins us, President and CEO with Marriott International. Hotel industry and hospitality industry globally is going through a very strong patch. So is this more like an India phenomenon or global phenomenon? Anthony, good morning. Thank you for joining us. It's your first time on ET Now. So welcome and hope you're enjoying your stay in India. So Anthony, I'm going to pick up something which you've mentioned in the past. You've said that despite interest rate environment, inflation and global geopolitical problems, the recovery in the hospitality or the hotel industry is real. It's beyond a sugar rush. What is fueling this optimism for you?
Well, certainly the data that we've seen, we are a data-driven company. And when we look at forward bookings, when we talk to our business transient customers, our leisure customers, our group meeting and conference attendees, we have seen extraordinary resilience in travel. The impact of the pandemic, I think, if anything, has acted as a bit of an accelerant and a powerful reminder of the impact of in-person interactions, whether that be for business or leisure. We also, in many markets around the world, continue to see an exceedingly strong consumer balance sheet, and we see strong employment numbers in many inbound and outbound markets around the world. And it's the confluence of those factors that continues to drive strong and growing demand. And it's those demand patterns that drives our optimism about the continued recovery of our business and of the travel industry more broadly.
Anthony, 2002 saw the company set records for the fees adjusted EBITDA. What kind of revenue or ARPU did you clock, and what is the outlook for FY23?
So as you point out, 2022 was a record performance year for Marriott. We posted record fees, record EBITDA, record EPS. And I would remind you that we achieved that performance in spite of the fact that January was very difficult last year because of the impact of the Omicron variant. And the China market was largely locked down for the bulk of the year. So we continue to expect increased performance into 23 and beyond. During the fourth quarter earnings call, we gave a bit of guidance, and we said we expect to see global RevPAR grow between 6 and 11% in 2023. Now that 500 basis points range is a little wider range than we've offered historically. And I think the width of that range is appropriate given some of the economic headwinds and some of the economic uncertainty that's out there. But achieving something in that range would still be a powerful reflection of the continued recovery of travel.
Now, you've seen a 25% recovery of cross-border travel in and out of Asia Pacific. Given your footprint, what kind of opportunity does this present for the APAC region?
It represents a tremendous opportunity, not just for the Asia Pacific region as a sub-region, but for our global business. If you look back at a pre-pandemic period, 2018, 2019, nearly 20% of our global room nights were represented by cross-border trips. In the early days of the pandemic, that percentage dropped to very low single digits. And as the recovery has evolved, we've seen fairly steady improvement. But even in the fourth quarter of last year, only about 16% of our total room nights were represented by cross-border trips. And so we think there is still meaningful upside as the recovery continues, as borders continue to open, and as the ability for travelers to cross borders becomes more and more frictionless.
So you mentioned that you have an exciting and a long runway of growth outside India. Tell us some more about it.
Of course, and I'll give you just a bit of context. If you look at the company's global portfolio at the end of 2022, in round numbers, we enjoy about a 16% market share in the US, our largest market. But outside the US, we only have between a 3 and 4% market share. So over the next several decades, the runway for growth, as you describe it, is very significant in terms of our international distribution. We continue to see strong, rapid growth across most of Asia Pacific. The Middle East is a terrific set of growth markets for us. We see big opportunity in Europe. And the Caribbean and Latin America is quite exciting for us. And as you've likely seen in some of our announcements, in the next month or two, we'll close on the acquisition of a large Mexican chain called City Express. And that acquisition will achieve a few objectives for the company. It will solidify our leadership position in the Caribbean and Latin America region, but it also signals our entry into the mid-scale segment. And that's a segment where we think we have growth opportunities, certainly in the CALA region, but potentially on a global basis as well.
Signing is in Q2 accelerated. The company signed on an average 2 deals a day for a total of about 700 plus management contracts and franchises, which is almost a 20% growth in terms of total signings. What does this year look like?
Well, as you may know, early in my career, I was responsible for the company's global development efforts. And so to me, year over year growth is always the objective and always the priority. We're off to a great start, and we'll talk more about that in a few weeks in our first quarter earnings call. But I'm quite encouraged about our pace of signings, our pace of MOU signings. Just while I've been here in India this week, I've been talking with many of our Indian owners, and their optimism about the continued recovery and what that recovery means in terms of their appetite for continued investment in Marriott's brands across India is very, very encouraging.
You earn a significant portion of fee-based revenue from top line. What kind of projections do you have, and what are the profitability drivers there?
Well, we've not given forecasts beyond RevPAR forecasts or guidance, for 2023. But we certainly are bullish that the continued recovery of the industry will continue to drive both top line revenue, but also profitability for our owner and franchisee community around the world. And we had the good fortune to spend a bit of time with Prime Minister Modi yesterday. And one of the things we talked about was how focused we are on the financial health of our owner community here in India.
You're present in 40 cities in India, currently have a target of 200 hotels by 25. Are you on track for that?
We are. In fact, at the HICSA conference earlier this week in Bangalore, I talked about a goal we've set for ourselves that by 2025, between open and pipeline hotels, we'll have at least 250 hotels. And I think that really just reflects us getting started. Today, India is our fourth largest market in terms of our footprint. I've had the privilege to spend the week with our India team, and I can tell you they are keenly focused on moving up the rankings. We're very bullish about the political stability and environment here in India. We're excited about the broad range of diverse markets and experiences that the country has to offer. We are excited about the passion that our owner community has to continue to invest and grow in India. We talked at length with your Prime Minister yesterday and with your Tourism Minister about what a strategic focus area travel and tourism represents as part of the broader macroeconomic priorities. And so India, from a travel and tourism perspective, has a very, very bright future, and we want to be a meaningful part of that. We are humbled and excited about the fact that we have the largest footprint of rooms across India today of any lodging company, and we want to continue to grow our portfolio here in this really exciting set of markets.
Anthony, it's your first time on ET Now, so it was great to have you and certainly hope to see much more of you going forward.